Hello, class. I want to talk a little bit about Social Security. This taxation of Social Security is way more complicated than it should be and gives students a little bit of trouble sometimes, so I want to make sure that we clarify a couple of things. First of all, this is a 1040. Social Security benefits are on line 20A. You put the total here, and then on 20B should be the amount that's taxable. That's what's included in our calculation of adjusted gross income and taxable income and so forth. So it often, almost every time, is a different amount. So what's here and what's taxable are two different numbers. And what we have to calculate is, this one's going to be found right on a 1099 from the government. This will be calculated by us to include the right amount. So going over to Excel for calculation, we have a couple married filing jointly who have a pension income of $25,000, tax exempt interest of $10,000, Social Security $15,000, dividends of $4,000. So that's their total income. Now back on the 1040, tax exempt interest of $10,000 would have been listed here, but not necessarily on part of the income. And just because we have to include it in our calculation here for Social Security does not make it taxable. So it still belongs on the non-taxable line, but Social Security requires us to add it back in. So the number that we're looking at is what's called provisional income. It is all the income. It is the pension, the tax-exempt interest, half of the Social Security, and the dividends. So $46,500 is this couple's provisional income. Now, what we're going to do is that is shown also on your textbook on page 3-27, line 3 on the little example. Okay, well, actually line 5. Now, what you do is you see if they are over the base. Now, for married filing jointly, the first threshold is $32,000. So we take the provisional income, we subtract the $32,000. Now, if the provisional income would have been less than $32,000, then none of the Social Security would have been taxable. If it's over $32,000, then we have to do this calculation. So if we have $14,500 is the amount of income over the threshold, and Social Security, we're going to take half of that $14,500. So we take whatever it went over, divided by 2, and the answer is $7,250. Now the other thing, the other limit is we could, if it was at this point, we would compare the $7,250 to half of the Social Security benefits. So assuming that we can stop there, our amount of taxable Social Security benefits can never be more than the 50% of Social Security, or the $7,250, the 50% of the amount over the threshold. So that's our first test. Now, in this case, $7,250 would be the correct answer to put down on the taxable amount. Now, this couple, as it's illustrated also in the textbook, is over the second threshold. The second threshold is $44,000. So when we reach over $44,000, then the couple needs to start paying 85%. So you pay nothing under 32. Between 32 and 44, you pay 50%, and then pay on 50%, and then over 44, you pay 85%. So we take the $46,500 minus the $44,000. That's $2,500. Okay, and then we multiply that by 85%, and then we add it to 6,000. So 6,000, if you look at it, is 50% of the difference between 44 and 32. So 44 and 32 is $12,000 difference. 6,000 is half of that. So remember, it's 50% of the amount between those when you're between 32 and 44. So we add those together. 8125. That is our tentative taxable amount. Now we compare that to all right, 85% of the Social Security benefits. That would be the maximum amount that would be included in income. So obviously this is the lower of the two, and thank heavens we get to choose the lower. It's higher than this number, which would have been our answer if we would not have been over the 44,000. So on our schedule, on our form 1040, back over here, we would put the 15,000 Social Security benefits here, and the taxable amount would be, our 8125 would go here. All right? So, moral of the story is, under 32, pays none of it, would be zero included in our income. If it's between 32 and 44, it's either half of the Social Security benefits or half of the income between those two. Like we compared up here, 7250 compared to half of the 15,000. If it's over 44,000, you have to take the 6,000 plus the 85% of the amount over 44 and compare it to 85% of the Social Security benefits, and you get to choose the lower amount as long if it's higher than that, which it will be as long as you're over 44,000.